Welcome back. Welcome back. This is the People's Voice. I am Trey Evans, and I am the People's Voice. Thank you again for checking out the podcast this week. As always, it is greatly appreciated. As always, we thank everyone who has taken some time to listen to the podcast today. We do understand that you could be utilizing your time to do something else. So we are appreciative that you're taking the time to spend with us. As always, if this information is valuable and you find this to be enlightening or worth sharing, we ask that you subscribe to the podcast and turn on notifications. That way you can be notified when each episode is released. And we do put out a new episode each and every Friday, which is heard on all podcast platforms. And we also put a video out on YouTube every Wednesday as well for those who like to watch the podcast. But in any event, we say welcome and welcome to the People's Voice podcast. So today, I want to discuss what has currently happened in the world of finances, specifically what has occurred with a recent vote that was passed by the House lawmakers here in the United States to essentially overturn a rule that would have limited banks in terms of the amount of fees or what type of fees they could charge consumers to utilize their products. So that's what I want to cover today. I want to talk about this reversal of a rule that was put into place last year, or at least was proposed last year, to kind of limit banks and credit card companies on the excessive fees that are often charged for various services and transactions. And this, as I said, was overturned because there was a lot of work done by the previous administration to, address what they had identified, specifically through the Consumer Financial Protection Bureau, what they had identified as junk fees. And these junk fees are not just associated with banks and credit card companies. You have junk fees associated with other services as well, for those who go to hotels, or if you have ordered food, or various online services. You have seen a junk fee. That's that fee. Even what do you call it? Cell phone companies. You've seen that fee where you're like, "What's this fee for?" That's a junk fee. When the bank is charging you a statement fee, or the cell phone company is charging you a statement fee for paper statements, but they don't send statements out. That's a junk fee. But so this was being addressed last year by the Consumer Financial Protection Bureau under the previous administration. Well, fast forward earlier this month, as I stated, there was a vote. And the vote came in 217 to 211. It was pretty close, basically allowing President Trump, because the bill has gone, towards him for signature, that would basically reverse what was put into place under this rule. So I'll talk about that rule that was put into place last year, and then I'll kind of talk about, what some of the concerns are, and then obviously what you can do to limit yourself from having to pay some of these exorbitant and excessive fees. So I guess to first go back, I would start just to kind of give a quick overview of the rule itself. So, and I won't go all the way back. I'll just kind of go back to what the recent rule, and I guess a little bit before that. So the Consumer Finance Protection Bureau, well, let me go back to 2009. So back in 2009, there was a a bill passed or act that was called the Credit Card Accountability, Responsibility, and Disclosure Act of 2009. And in that act, what it did was it banned companies from charging excessive late fees. And it required them, specifically credit card companies, and it also required them to establish clearer disclosures and offered some additional consumer protections. Because, at one time, credit card companies were charging excessive late fees and higher interest rates. And if you read those terms and agreements, at one time, those terms and agreements were not in there. A lot of people don't realize that a lot of that has to do with acts and laws that were passed. But in any event, this was passed in 2009, specifically to protect consumers from excessive late fees. Once it was implemented, this was also attempted to be extended towards banks, because banks often charge many fees, overdraft fees, in particular for their services if you overdraft an account. And banks were, I guess, immune from this rule from 2009, if you will, because there was a provision in the act that basically allowed banks to charge, anywhere from $25 and up for late payments, and also to adjust for inflation and so on and so forth. In any event, I give you that and then bring you up to 2004. 2024, last year, the CFPB, the Consumer Finance Protection Bureau, basically created a rule under that junk fee rule that was pushed by the previous administration that would have basically capped late fees at $8 and ended any automatic inflation adjustments, because oftentimes they would increase these charges based on, to cover inflation increases and things of that nature. And they felt that cap would be sufficient enough for credit card issuers. And then they also were going to cap overdraft fees at $5 for banks. And they felt that was sufficient enough to cover any cost that banks and insurers, credit card insurers, would incur as a result of providing services. Well, that didn't fly well at all. And so what we get to earlier this month is the ruling that was again passed by the House. It's basically saying that not only are they not going to limit banks to the $5 overdraft fees, but they are also trying to undo other protections as well, including what's going on with credit card late payments and things of that nature. The argument is that credit card issuers and banks feel like they need some form of protection because they are taking the risk by offering services. Why is this an issue? Well, this is an issue because it has been argued that many of these fees are not to protect banks or credit card issuers, but oftentimes these fees are being used as a revenue generator, which
men lie, women lie, the numbers don't.
Which I don't think is that big of a shock for anyone who knows anything about business, right? And you don't even have to know about business. You know that these fees are being used as a revenue generation. So that's the argument from the banks and the credit card companies. I give all of that to you because as of this month, that now means that banks can basically continue to charge exorbitant fees for their various services. Now, who does this affect? I'm reading a report here from who is this from? This is from the Center for American Progress. Yes. And they did a report about this. I believe this was from last year. They did a report about this from last year when it was being proposed about junk fees and how to kind of clean these things up. And in this report, they give a ton of data regarding some of these junk fees. Specifically, when you start talking about credit card fees, it says, and banking fees, it says 10 billion in estimated annual consumer savings from capping credit card late fees. $3.5 billion would have been saved in estimated annual consumer savings from limiting overdraft fees by banks. And it goes on, to talk about other wins that would have come from capping fees, overdraft fees, and also capping credit card late fees. But who does this affect the most? Well, in this study that they provided, it says here, Black and Latino households face structural barriers in the financial market that slow their wealth growth and can make it more likely that they incur junk fees, because these fees, and I think I said this in my opening statement, are often being paid not by those that have the ability to pay, but oftentimes by those who do not have the ability to pay. They're the ones that are paying these fees that are often being charged because they either are late with payments or they have low balances in their banking accounts, which forces them to overdraft and things of that nature. So there is a specific demographic, financially and culturally, that is being affected by this. I'll just read from this again from the Center of American Progress here. From their report, it says fees unevenly burden those who already face obstacles to accessing credit and other financial services. Due to past and ongoing discrimination, Black and Latino households experience higher interest rates and fees than their white counterparts for the same type of loans. They are also more likely to resort to more costly forms of debt, such as credit cards, that leave them with less savings to cover additional expenses. In short, Black and Latino households face financial barriers, as I read before, which can slow their growth and can make it more likely that they incur these junk fees. So these junk fees are being masked by the companies that provide these services as a way of protection for them. But ultimately, not only is it a revenue generator for these companies, but it's also hurting many of those who are in vulnerable populations as we go forward. In addition, there has been even additional changes. Now, the director of the Consumer Financial Protection Bureau that was appointed by Donald Trump back in 2021 was recently fired. And he was recently fired because he was one of the people that was leading the charge to have these fees, these junk fees, reduced. Rohit Chopra, who was is now the former director of the Bureau, spoke about this on an interview last year on CNBC. So I want to play what he had to say about junk fees, and then especially when it came to banks. So I'll play that, and then I'll close out from there. But this is Rohit Chopra, who was the former, or is now the former head of the former director of the CFPB. So listen to what he said, and then we'll close out, and then I'll give some recommendations and we'll close out from there.
Or never provided, but that sounds very different than having a business that is built around fees that a lot of these companies do. Is it going to be illegal to have those fees?
Well,
it all has to be wrapped into the
So,
the
Becky, is it a legitimate service or is it not? So I'll share with you. We have found, for example, Bank of America, Wells Fargo, several others, charging multiple insufficient funds fees for the same single charge. We have seen them reordering the transaction so that they can trigger 3 overdraft fees instead of 1.
But overdraft fees are legitimate. You just can't do multiple charges on those.
Well, you have to do it in a fair and transparent way. So sometimes it's about showing and disclosing, but sometimes it's the way you're actually doing it behind the scenes. And the truth is, when
How often does that happen? Because I would be surprised if these banks were
Well, we've
doing
seen
it
it go down by billions of dollars. And I think what happens is they start seeing their competitors doing it, and they see regulators who have sometimes been asleep at the switch, and then it becomes a race to the bottom, and that's exactly what we have to reverse.
What in particular on that kind of thing? What banks are you looking at?
Well, we're not going to disclose what our enforcement investigation.
Right.
And you know, as you heard him say there, that's just one case in terms of banks where they already have a fee imposed and then they keep charging fees over and over and over. And listen, these fees become crippling because, you know, and oftentimes, as I said, it's usually charged to those who need it the most, which keeps people not only paying these, but also oftentimes keep these people in debt. And you've heard 1,000 times I've said,
look, brother, debt is slavery.
And so once you get into that type of system, or if you get into that type of flow where you're constantly trying to play catch up, you essentially become, you know, enslaved, if you will, for dramatic effect, to these companies, because you're constantly digging yourself out of a hole that you will never, you know, eventually get out of. But just to finish up here, so how can you avoid these fees, right? Because, you know, not only do you have these fees, but let's talk about what can be done to avoid these fees. I was reading an article here from the Associated Press. They talked about this as well, and I thought they gave a few great suggestions. Now, you know, one of the just right off the top, if and when you can avoid using credit, or if you use credit, pay it off as soon as you possibly can. That's just basic 101 financial literacy. You know, try to use cash over credit, but in the event that you don't have the cash and you use credit, pay it off as soon as you possibly can. But some other things that they have recommended, again, this is from the Associated Press. It says enrolling in an auto pay for credit cards can help you avoid making late payments, right? There are some credit cards that don't charge late fees at all. They talk about, and this is not a commercial, this is from the article that was done by the Associated Press. It says City Simplicity, which is a Citibank credit card, and also the Apple Card do not currently charge late fees. It says Discover also offers a credit card that will automatically waive the first late fee. And again, these are just recommendations. It's for those who are utilizing credit and have to utilize credit. These are some ways to avoid those late fees and also, you know, make payments before interest begins to pile up. It also says it's also possible to appeal credit. It's also possible to appeal credit card late fees charged by your credit card company by calling them directly. So like in the event that the director was talking about, if you see that you're getting charged for a late fee over and over, or if you feel like there needs to be a dispute, call the credit card company directly to dispute those. And oftentimes they can reverse those fees, especially if it's the first time that it's happened, or if, you know, there's been a mistake where it's been recurring on the same charge. You may also want to consider making payments on your credit card balances, you know, during the month, which I just said. You know, again, once you pay it before the balance is due, you lower the interest rate or at least you lower the amount of interest that you have to pay. In addition, if you're having trouble making ends meet, you can ask credit card issuers about hardship programs, and these are typically available to people affected by job loss, illness, or medical conditions, natural disasters, and other emergencies. So there are some things that you can do to prevent having to pay for these fees. But I wanted to put this on everyone's radar so we are aware, everyone is aware of what's going on, because this bill, as I mentioned, is going towards the president's desk for signature. I don't in any way assume that he's not going to sign this bill. And this information needs to get out, because these rules were actually supposed to take place, I believe, in October of this year. And this is not going to be the case now. And with the current climate and where things stand with the economy, specifically when you start talking about more vulnerable populations, these fees are going to impact those individuals. So I want to get this information out. Please share this information so everyone is aware of what's going on, so you can be prepared on how to, address this issue. But that's what I wanted to talk about today. Like I said, I saw this news story pop up, and it's kind of been floating under the radar a little bit, and I wanted to make sure that I gave it the exposure that I think it needs to have. But if you want to leave a comment, as always, you can reach me at the People's Voice Podcast on Instagram. In addition, you can reach us or you can reach me at I am Trey Evans on all social media platforms. And then, of course, we'll post a video on YouTube if you want to leave a comment there. All comments are welcome, and we look forward to responding to them. But that's my time for today. As always, dreams are not just for sleeping. Please wake up and live your dreams. My name is Trey Evans, the People's Voice. Tell somebody about the dream. Salute.